Hello and welcome to Crypto Bible. My name is Oliver, and in today's episode, I'm going to be going through some crypto news stories with yourselves. So if you love the world of crypto and you want to be notified of everything that's happening, breaking stories in the world of crypto and other crypto contents, go ahead, throw me a like, get yourself subscribed to Crypto Bible and turn on that notification bell icon so you never miss a content piece coming up that we have coming out. Right, first things first, let's jump into CoinMarketCap and see what the market's doing. So here we have CoinMarketCap. First thing I like to do is check out the trending coins. We've got Shiba Doge, Metaverse DAO, and Doge Rise Up. Top three biggest gainers are Shopee Coin, Crypto Tycoon, Metaverse Exchange, and they're the top three gainers. Let's have a look at some of the top coins. So we've got Bitcoin down 2.73% today, trading at $37,088. Ethereum down 3.52%, trading at $2,538. Then we've got BNB down 3.97%, $371.35. Cardano down, Solana down. Okay, right, let's jump into the first news article of the day. So first article is from Decrypt. This week in coins, Bitcoin, Ethereum, Avalanche, and Dogecoin recover. Crypto markets finally looked to be on the path to recovery after a brutal start to the new year. Bitcoin's up over 8.7% over the past 7 days to 37,677 at the time of writing this article, according to CoinMarketCap. Number two, ETH is up 8% at that time as well. Over the preceding week, both market leaders have crashed their lowest prices since summer 2021. Several other top cryptos are doing particularly well. AVAX, Avalanche, Ethereum challenges up 22% in the past week to nearly $72. Dogecoin and Polygon are each up 11% in that time. Is anyone out there bullish on those coins? Let me know in the comments below. Solana, dramatic week. A cursory glance would only show Solana up by 1.4% over the last 7 days. But on Monday, Solana had lost about 16% of its value in 24 hours. Was down 42% in 7 days after high network congestion led to a partial outage last weekend. Now it's on the path to recovery. Solana founder Anatoly Yakovenko acknowledged that the network was having growing pains after many users complained about across social media. Yakovenko maintained, in spite of these severe disruptions, the network remained live, although it was only clearing about 800 transactions a second, about a quarter of its typical average workload of around 3,000 transactions per second. This week's the biggest loser in the top 20 cryptos by market cap was Terra's Luna, which is down 17% to $51. And this price fall comes off the back of months of uninhibited growth. And considering also that it's 2.5% higher than it was 24 hours ago, Luna's correction doesn't look like cause for concern. On Monday, Bank of America released a report concluding that central bank digital currencies are the inevitable evolution of today's electronic currencies, and that a digital dollar could help maintain the American dollar as the world's reserve currency. The report guesstimates that a US CBDC will be issued between 2025 and 2030. Is that fair enough to say from them, 2025? Can you see it happening before that? I'm not sure. I'm not so sure. I think 2025 is probably about right. What do you think? Monday's other big news was that Ethereum 2.0 is no longer coming. What? What are you talking about? Before anyone spits out their coffee, no one of the promised features of ETH2 are cancelled. The network still migrate to a cleaner, greener proof-of-stake consensus mechanism and phase out mining. But the Ethereum Foundation rebranding the shift, where 2.0 gave the impression that Ethereum was receiving a ground-up overhaul, the reality is most of ETH1, or the execution layer, will be kept as it is, while the new ETH2 features will be incorporated atop it as a consensus layer. So it's a bit of rebranding, basically. Nothing's changing. On Tuesday, Russia's finance ministry reacted to calls from the Russian central bank last week to ban crypto entirely. The director of the ministry's financial policy department, Ivan Chebeskov, said it would be necessary to allow these technologies to develop and called for regulation, not prohibition. Following day, the President Putin told government members over a video chat, in spite of the central bank's hardline attitude, Russia has a certain competitive advantage when it comes to crypto mining. including an abundance of electricity and technological proficient personnel. So it kind of makes sense for them not to ban crypto. Across the border in Kazakhstan, the Kazakh government cut off electricity to crypto mining operations in the country between Jan 24 and 31. Since China began its concerted crackdown on crypto mining operations, many miners have fled over the border into Kazakhstan, which quickly became the second biggest source of Bitcoin mining in the world. And their current outages don't appear to have impacted Bitcoin's hash rate. On Tuesday, International Monetary Fund warned that El Salvador should stop using Bitcoin as legal tender, which the Central American country has been doing since September. They think Bitcoin is a problem for El Salvador. The economy is shrinking while public debt is mounting, and using something as volatile as Bitcoin entails larger risks. This could halt the country's recovery. El Salvador President Nayib Bukele, he just shrugged. And on Thursday, United States Securities and Exchange Commission rejected Fidelity's application for the Bitcoin ETF. Fidelity Stewards awards $4 trillion worth of assets. The Boston-based company launched a successful ETF product over the border in Canada last December, so it's got a lot of clout. But crypto still has a long way to go before it charms US regulators. Some interesting articles there. Are you bullish on any of those coins we mentioned? Does anything interest you in the article? Anything stand out? Let me know in the comments below, and you know what? We can talk about it. Let's move on to the next article. Another one from Decrypt. DM is dead. Facebook isn't done with crypto. We spoke about this a little bit last week, didn't we, when we found out that their stablecoin ambitions have kind of flopped. So this is a little bit, and then we got a little bit more information on it. So they announced their grand crypto plan on June 18, 2019. It's a borderless global currency called Libra, backed by a collection of low volatility assets like bank deposits and government securities in currencies from stable and reputable central banks. In other words, a stable coin, which was called Libra. Same day, Facebook announced a crypto wallet called Calibra to hold your Libra. 2 years, 7 months later, Facebook's called Meta, Libra's called DM, and DM is reportedly selling off all of its assets. It is ignominious end to a project that everyone in crypto knew was doomed from the start. The only crypto product Facebook actually shipped was the Novi wallet, which is formerly Calibra. A lot of different names. But it can only store the Paxos stablecoin USDP since DM never launched. So what did Facebook do wrong? Well, its stablecoin was never really decentralized, despite Facebook insisting Libra was overseen by the Libra Association, members based in Switzerland. 4 months after announcing Libra, the association lost 8 founding members, including MasterCard, PayPal, eBay, and Stripe. Big names. They saw the writing on the wall. The stink was too strong. It was also hard for Facebook to argue Libra wasn't just a Facebook thing when it put its own executive in charge of it, David Marcus, formerly the head of Facebook Messenger, and he ditched the company back in November. But Libra's whiff of centralization wouldn't on its own have spelled doom for the project. After all, critics point out that the 3 leading stablecoins are all centralized as well. Tether is controlled by Tether and Bitfinex, and USD is controlled by Circle, and USDP is controlled by Paxos. No, the problem for Libra from day one was Facebook's brand. The stablecoin announcement was a watershed moment. Jerry Brito told Jeff Roberts his must-read feature this week on the Biden administration plan to clamp down on stablecoins. It alerted Congress to stablecoins, which the government sees as a threat to monetary authority. And it also came on the heels of Cambridge Analytica and other scandals about Facebook's political influence and failures to keep misinformation off its platform. Despite all that, there was one fact that suggested Libra could still succeed. 2 billion users, that's quite a lot. That base makes it hard for any Facebook product to completely fail. If Libra could just get out the starting gate, some large amount of people were likely to at least try it, but the political hurdle was just too high. Now, it's tempting to declare this is the end of Facebook's crypto's ambitions, but that's not right. It has all gone in on the metaverse. We know that. And the metaverse is widely seen these days as a crypto thing, even though that isn't quite accurate. The concept of the metaverse dates back to the early 90s with Neil Stephenson's Snow Crash, and metaverse games like Second Life and Animal Crossing were pre-crypto. But the rise of metaverse games that use blockchain and NFTs has blurred the lines. Facebook was so desperate to show that it's all in on the metaverse that it changed its name to Meta, The stock is down 5% since the rebrand and has renamed Oculus to MetaQuest, prompting widespread jeers, including from VCs like Chris Dixon, whose firm was built on money made from Mark Andreessen's early Facebook investment. Dixon has since deleted his tweet. And according to a report from the FT, Meta is now experimenting with an NFT marketplace on Instagram. Wow. So Meta stablecoin dead, and it fall to other issuers like Circle and Paxos to navigate the government's hostility towards stablecoins. But don't expect Meta to give up yet on crypto. Okay, so interesting. I guess I kind of see them having another crypto when they have their own metaverse. That kind of makes sense. But let me know your thoughts about this article in the comments below. On to the final article of the day. Now, this one is from CoinDesk, and this tagline is, alts have been underperforming expectations for now. So it may be winter, but the crypto bears are not hibernating. Nonetheless, it's possible to find opportunities in this market. One way to do so is to seek out cryptos that can outperform the first and biggest of them all, Bitcoin. Except that's easier said than done. You don't have to tell me. Trying to find a well-capitalized currency that doesn't see its price closely tied to Bitcoin is yet hard to come by. So this column has touched on correlations and volatilities over the past few months, and there's a reason why that's important. For portfolio managers looking to hedge their alternative coin holdings, knowing their assets and relationships with the more liquid of the lot gives a sense of how big of an offsetting position they will need to take. And it should also offer at least one data point on how to spot opportunities to diversify portfolios. Well, that's the hope anyway. Past month has been rough all year round, and some altcoins just aren't just getting hurt, they're getting clobbered relative to what their expected returns were relative to Bitcoin. To come up with those returns that they were expected to be, they had to first determine the beta of each cryptocurrency. This is the measure of how an asset moves when the overall market rises or falls. For those who may have forgotten their business school intro to finance course, one method to calculate the beta of an asset is to multiply its correlation to the market with the quotient of its volatility divided by the market's volatility. In this case, the market is Bitcoin. After arriving at a beta, we can try to come up with what we expect the markets to do over a given time frame. So they've chucked a disclaimer in here. The methods you're about to see are not approved by academia, and basically it's not financial advice, and please trade responsibly, do your research and seek professional assistance before taking another step. So let's see what they said. They looked at 20 very liquid, highly capitalized assets and multiplied their beta times Bitcoin's return from Jan 1st to 26 to get what they're calling an expected return. Proper application of the classic asset pricing model would say one should multiply beta by the excess returns of the market, which is the case in Bitcoin minus the risk-free rate, and then adding the product to the risk-free rate itself. What we found is that most of these cryptos, apart from Algorand and Cardano and Dogecoin, woefully underperformed Bitcoin and what they were expected to do during such a downturn. So they're basically saying Bitcoin is still top, and the only ones that didn't woefully underperform were Algorand, Cardano, and Dogecoin. So we have some calculations here. Bitcoin at the top, and then ETH 7% worse, XRP 5% worse. What is that? BCH 12% worse. Difference on the difference one on the end. All of them, we keep going down, 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 and then look, how goes at the bottom. So if you want to have a look at that, on CoinDesk, go and check it out, or you could just pause the video and have a bit of a closer look to see. Holding on to altcoins over the past month wasn't painful, it's excruciating. Yeah, thanks. This is only the past 3 weeks, so pull back a bit, the story's quite different. Altcoins have grown tremendously compared to Bitcoin and Ether over the past year. Not at all, of course, but taken as a whole, valuation increased with alts in 2021. For some investors, the recent excessive sell-off relative to what could be expecting is fleeting. Any sign of decoupling trends to be temporary, mostly because the market is still very much sentiment driven, and sentiment tend to be universal across the coin spectrum. Richard Yan, co-founder of blockchain company Byte Labs and host of the Blockchain Debate podcast, said to CoinDesk. So Yan actually predicts that alts will outperform Bitcoin in the long run. So he defines functional as those that do things such as provide an ecosystem or operating systems that also have definitive value accrual mechanisms like staking or gas payment for services, and therefore there's more of an anchor when it comes to valuation. So basically, he thinks altcoins will outperform Bitcoin in the long run if they have a use case, if they have utility, like Ethereum, AVAX, Cardano, Solana, the list goes on. That's what he's saying there. During a pullback, functional coins still end up higher than Bitcoin in percentage change from when the bull market got started, he added. When we noted that layer one blockchain darling Solana token halved in price since the start of the year, Yan was quick to point out it's still up several multiples of where it was trading in March 2021 compared to Bitcoin, which has lost about a third of its value since then. The key part, however, is the time frame, is the long run. If one's portfolio is wiped out before then, the long run may be too far off. As John Maynard Keynes famously said, in the long run, we're all dead. Wow, John. Positive words. I get what you're saying, but yeah, a little bit different. That can often apply to portfolios as well. Okay, so that's been today's news stories. Let me know any thoughts or comments you may have down in the comments section below. You bullish on any altcoins at the moment? Have we mentioned any in the articles we spoke about today? What do you think about the Facebook situation? Anything you want to chat about, let us know in the comments section below. And remember, throw me a like, get yourself subscribed to Crypto Bible. Don't forget to turn on the notification bell icon so you never miss any breaking news stories in the world of crypto. And of course, all of our other content pieces as well. Thank you ever so much for joining me for today, and I'll see you on the next one.